With the price of Rocket dropping almost 20% last week, people have been asking me, what am I going to do about my wheel strategy? So here it is. The first thing I'm going to do is... But before I get started, I need to take a moment and address something that's happening in the comment section of my videos. There are one or more individuals involved with injecting an endless stream of spam into the comments. Now, I apologize to my subscribers and viewers on my channel that you have to put up with this, but it's out of my control. Now, the best that I can do is spend about 1 hour every day deleting these comments. And so I do that, but also I can make everyone aware of what's going on. So the spam that these people are writing, it's very deceptive because they're making it look like I'm actually writing the comments. The spammers are using my name, but you'll notice some discrepancies in their comments. And there are 2 simple ways to spot the imposters. Here's a quick and simple method for identifying a fake comment from a spammer. Here's a prime example. If you take a look at the name, who posted the comment, you'll notice that the name is not highlighted. And let me show you what a real comment looks like. So here's a real comment from me, and you can see that the name of my channel is actually highlighted. And that's the easiest way to tell that a comment is fake or genuine, is whether or not the name on the post is highlighted or not. And then also another dead giveaway is the fact that if you look at the fake comment, it shows a low number of subscribers. It shows 1 subscriber. It may show 0 or 1 or some low number. Well, obviously that's not going to be for my channel, but that's another indicator that you can look for. And just to be clear, I will never recommend for you to contact someone for trading Forex. I will never recommend for you to contact someone about trading cryptocurrencies. I'm never going to ask you for your email address. I won't ask you for your phone number. And I will never ask you to use WhatsApp to contact me. Thank you for your patience, but I had to get that out of the way. But now let's get down to the point of this video. Now that Rocket Company's stock symbol RKT, now that their share price has dropped so dramatically, what do I plan to do with my wheel strategy? I had started an options wheel by selling a cash secure put for stock symbol RKT. Well, because of the sudden market dip in price, we move on to step 2 of the wheel. The shares were assigned to me, and now I own the 100 shares of stock, and I'm able to use them as collateral on the second half of the wheel strategy, where I plan to use the shares in order to sell a covered call. Before I get started with the covered call, let me do a quick recap to show how I got to this point. At the start of the trading day on May 3rd, 2021, my account had a starting balance of $2,150. Now, during that same morning, I decided to sell a cash secure put for stock symbol RKT. For this put option contract, I decided to choose an expiration date of May 7th, 2021, giving this put option contract a duration of 4 days. I decided to use the strike price of $21.50, which at the time was paying 59 cents per share, which means when this option contract gets filled, I'll receive $59 credit as my premium payment. While at the same time I received this $59 credit from the premium payment, $2,150 is simultaneously reserved as my collateral. Now let's jump ahead to the expiration date of May 7th, 2021, and I'll walk you through what happened for this transaction. So on the expiration day, May 7th, 100 shares of Rocket, stock symbol RKT, were assigned to me, and that's because the market price closed below my strike price, which gave the buyer of my option the ability to execute this contract. So when the buyer executed this option contract, the funds that were reserved as my collateral were used to pay for the shares. Now, in return for paying the $2,150 for the shares, I became the new owner of record of those shares. And so my account was credited with now being the owner of 100 shares of RKT. So at the end of the day, I paid $21.50 per share, which was my strike price, for 100 shares for a total of $2,150. But keep in mind, I received $59 as credit when I sold the option contract. So the next thing to do is to compute the actual cost basis, or the amount of money that I paid for the shares when they got assigned to me. So my cost basis is computed by taking the $2,150 that I paid, subtracting the $59 that I received, and that's from the premium payment, and that total is $2,091. And that's the actual amount of money out of my pocket that I paid for the 100 shares. So my cost basis per share can be computed by taking the $2,091, dividing it by the 100 shares, and the result is $20.91 per share is what I paid to acquire these shares. So the $20.91 per share is my cost basis, and that's an important number because that's the number that helps me compute what my break-even point is for this transaction. So I paid $2,091 for these 100 shares, which means that if I'm able to sell these shares for $20.91 per share or more, then anything over that $20.91 is my profit. Now with this in mind, I can carefully consider how I want to sell a covered call option contract using these shares as collateral. And my cost basis will be a prime factor in determining what strike price to use. Here's the current option chain for stock symbol RKT, and I've picked the expiration date of June 18th of 2021. Next, let's run through the numbers for me to sell a covered call option contract for stock symbol RKT. Based off this option chain, I'd be looking to sell a covered call with an expiration date of June 18th of 2021. And I would be selecting the $21.89 strike price, which is currently paying a premium of 32 cents per share. And keep in mind, my cost basis is $20.91. So when Rocket last closed for this video, the market price was $17.66. So the value of the shares, the 100 shares that I hold, is $1,766. Now I'm picking an expiration date of June 18th, which makes the length of this covered call option contract 39 days. I'm picking the $21.89 strike price, which is currently paying 32 cents per share. And my cost basis is $20.91, so my profit per share from price appreciation is 98 cents. So that's $21.89, the option strike price, minus my cost basis, which is $20.91. So that's how I came up with 98 cents. So then the total profit from price appreciation is $98. So it's 98 cents per share times 100 shares gives me the $98. And then the income from the premium is $32. And so my total profit, if this option contract gets exercised, would be $130. So then let's look at the possible outcomes of me selling this covered call. So outcome number one is where the market price finishes above the strike price. And in that case, the option contract would get exercised and my shares would get assigned to the buyer, and I would be paid for those shares. For outcome number two, the market price would finish below the strike price. The option contract would not get exercised. I would still retain my shares, but I still collect the premium. And so at this point, it would allow me to sell another covered call. So the result from outcome number one is I end up assigning my shares, collecting a profit from price appreciation and the premium. And so the overall result from the wheel strategy is a net profit. In the first half where I sold the cash secure put, I received $59 in premium. And in the second half with the covered call, I received $130 total from the premium and the price appreciation. So my total net would be $189. Now let's look at the results for outcome number two, where the market price finished below the strike price. So I would end up continuing the wheel strategy and just sell another covered call using the same shares. Keep in mind, every premium payment that I receive by selling another covered call lowers my cost basis. So my new cost basis would be $20.91 minus the 32 cents I received in premium. And so my cost basis now is $20.59. If you like this video and the information I provided, do me a huge favor and smash the like button. In this particular situation, it's a great chance for us to utilize our trade management skills. So number one, don't panic. Number two, don't become emotional. It's overwhelming the number of comments and emails I receive from traders who panic in situations just like this. Now, don't get me wrong, I agree that it is a stressful situation and one we never want to find ourselves in, but that's part of trading and investing in the stock market, which is why we use our trade management skills to handle the situation. So in this specific trade, what did I do? Well, first I had to know my numbers, and I showed you how I calculated my cost basis, because that's my break-even point, and that's very important to know. And what that did was allow me to construct a profitable covered call option trade because I knew my cost basis. Now, if the option contract got exercised, I'm going to walk away with a profit, not only from the stock price appreciation, but also the premium that I collected. And if the option contract expired, well, that's okay, because I could just use those shares again to sell another option contract and collect more premium, which would in turn would lower my cost basis once again. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.